Good evening, ladies and gentlemen. You're watching Business at 9 with me, Sumita Kareem. Over the next 30 minutes, we'll be taking you through the top developments that we are tracking from the world of business, markets, finance, and the global economy. So let's then begin with some earnings that are coming in. Well, the four major American majors, JP Morgan Chase, Citigroup, Goldman Sachs, and Wells Fargo, they've all posted a strong set of earnings in Q3. In fact, JP Morgan's earnings beat street estimates as the lender records a rise in profit in the third quarter, trading division gains and recovery in investment banking fees boost. In fact, JP Morgan has also revised its interest income forecast upwards for the year. But it wasn't just JP Morgan, as Goldman Sachs also reported a robust set of gains in investment fees. The figure, in fact, jumped 42% year-on-year to reach $2.66 billion, about $500 million higher than what was anticipated. The lender's profit rose 37%, while revenue was up 20%. Both profit and revenue also beat the street's expectations. Now, when it comes to the Citigroup, well, it was a good Q3 for them as well. Higher revenue across their divisions aided the company's growth in the third quarter. Revenue of trading and market segments particularly stood out this time around. In fact, it was the best ever third quarter for the market segment, and trading revenue rose 15% on an annualized basis. Profit, meanwhile, also increased 16%. Now, Wells Fargo, well, that bank's profit also beat analyst expectations to come in higher at 9% year-on-year at $5.59 billion. Remember that this was the first full quarter that the bank was free from the asset cap that was placed by the Federal Reserve. In fact, going forward, the company has hiked the target for its key profitability metric as well. So after a consolidated list of earnings as far as the top banks are concerned, the four American banking majors, it's now time for us to take a look at how trade on Wall Street is shaping up. Well, stocks are falling, resuming the sell-off that was seen late last week, given the fact that there are trade worries that have been reignited overnight by China. And of course, there's been counter statements also that have been given by China in response to what the United States has essentially stated with respect to the tariffs or the possible imposition of tariffs that could come about from the United States and China. In fact, the selling was led by AI shares that have also driven the bull market, but were also the biggest losers during Friday's rout. Nvidia, for instance, lost nearly 4%. Tesla and Oracle lost 3.8% and 4.3% respectively. Now, after curbing rare earth exports to the United States, China has moved to tighten its grip on global shipping as well. And of course, those concerns are currently being seen on Wall Street as well. So as you can see on your television screens, looking at the live levels, well, the tech-heavy NASDAQ is seeing a correction of over 200 points in trade. Then you have the S&P 500 that is getting corrected by close to 30 points in trade, and the Dow Jones is correcting by over 10 points in a trade. So we'll have to see how trade on Wall Street shapes up. As of now, there are worries as far as the Wall Street is concerned on account of the trade war that could begin between the United States and China, given now that China will increase its grip on global shipping. But some more news coming in as far as the global economy is concerned. And of course, there is an element of trade associated to that as well. The IMF Monetary Fund has raised India's growth forecast by 0.2 percentage points to 6.6% for the 2025-26 fiscal year, as the country's strong growth momentum is seen offsetting the impact of high U.S. tariffs on Indian goods. However, the IMF has lowered India's growth forecast by 0.2 percentage points to 6.2% for the next fiscal year. That's essentially what IMF stated in a report that it released in Washington a short while back. Now, the IMF's upgrade comes a week after the World Bank raised its India's growth forecast for 2025-26 to 6.5% from the earlier 6.3%, while trimming its projection for the next fiscal by 20 basis points to 6.3%, and that's largely going to be on the back of an impact that could be felt due to U.S. tariffs. But before, in fact, ladies and gentlemen, we move on to the next story, let's take a look at what the IMF essentially had to say on projections for the global economy.
So overall growth in the U.S. has remained fairly good. It's slowed down from 2024, but it's still about 2% in our estimate for 2025. But the place where you can see that reduction in the labor supply is if you look forward and you think about what is the potential growth for the U.S. And that estimate, of course, is very imprecise, but our estimate of potential growth in the U.S. has been revised down as well, and that's reflecting that lower contribution from foreign labor force that was quite significant in previous years, and we're not foreseeing that it will continue to contribute. Now, the other side of this is, what does it do to the rest of the world? Well, obviously, if you have slower growth in the U.S., per se, it's not a good thing for the rest of the world. There are spillovers that are coming from when an economy like the U.S. is growing strongly, then it generates demand for other parts of the world as well. So something that is contributing to a slowdown in U.S. growth is, in general, not something that is going to be good for the rest of us. The growth in the Chinese economy in the last few years has been coming in significant part from the external sector. But what we are seeing there is something interesting, which is we see an increase in volumes that are being produced, but we see increasingly a decline in the prices at which they need to be sold on markets. And that suggests that somehow the market has a limited capacity to absorb all of that is being produced coming out of China. And that suggests that growth engine, that second growth engine itself is starting to face difficulties. So our advice to the Chinese authorities has been for some time now, it's been for many years. If you look back at our Article 4, there is a need to rebalance the growth model towards a sustainable domestic demand.
The International Monetary Fund has raised India's FY26 GDP forecast to 6.6%, while cutting the FY27 economic growth view to 6.2%. The IMF has put India's FY26 consumer price inflation forecast at 2.8% and the FY27 at 4%. The IMF today released these numbers for India and rest of the world and the various countries and regions. The IMF has predicted that the global real GDP growth at 3.2% for 2025, and that is up from a July forecast of 3% and 2.8% in April. That comes after Trump imposed global reciprocal tariffs and a tit-for-tat escalation with the Chinese government ensured. The IMF said that the global growth is at 3.1% in 2026, and that's unchanged from the July forecast. It projects the UK growth at 1.3% and UK inflation at 3.4% this year and 2.5% in 2026. UK growth is forecast at 1.3%. The Chinese economy still has to get over the impact of the property sector. According to the fund, China's property sector problem is still not resolved. And the last 5 or 6 years, the global economy has been hit by shocks, and the Chinese economy needs to rebalance to sustainable growth demand in the country.
All right, thank you very much, Anurag, for bringing us all of those details as to what the IMF essentially said about not just global growth, but also what's going to come out as far as the Indian economy is concerned. And of course, there is some caution as far as next year is concerned. But how much of an impact will these tariffs really have on the Indian economy? That still remains to be seen, given the fact that the Indian economy essentially is not an export-dependent economy. But on that note, ladies and gentlemen, let's now turn our focus to the earnings corner. And Tech Mahindra has reported a mixed set of earnings for the quarter gone by. Both PAT and revenue for the company grew nearly 5% in the second quarter on a quarter-on-quarter basis. The top line came in at 13,995, higher than what analysts were penciling in, while a profit of 1,195 crores has been generated, and that has missed what the street was anticipating. The tech major has also announced dividend of 15 rupees per share. And for more details, let's go across to my colleague Mansi Dave, who's joining us with the fine print of what the numbers essentially look like. Mansi, so mixed set of earnings coming in for Tech Mahindra.
Absolutely. So as per our expectations, the revenue figure did see a jump of around 5% from 13,995. If I take a look at the scorecard, the revenue figure was above our estimate. The EBIT figure also was above our estimate. However, if we talk about the margins, they were in line. We were expecting a 12% margin, and that's what came in. But the profit figure was below our expectations. But on a quarter-on-quarter basis, even the profit figure did see an uptick of around 5%. However, it was below our expectation. The number came in at 1,195 crore. The USD revenue was up around 1.4% on a quarter-on-quarter basis. The question is why on a year-on-year basis we did see 0.2% down trends, which we should ask the analysts while they join in. The company also did declare interim dividend of 15 rupees per equity share, and also last 12-month attrition rate, if we take a look at that, it was at 12.8%. Total headcount at 1,52,714, which again is down on a year-on-year basis. And lastly, growth in revenue is driven by ramp up in recent deal wins. Talking about the management commentary, the management was quite positive and confident, and the MD and CEO, Mr. Mohit Joshi, did say that the company delivered broad-based growth this quarter, reflecting the strength of the strategy and execution. And the company also launched Tech M Orion, a next-generation AI platform, and Tech M Orion marketplace to help enterprise accelerate autonomous transformation. Now, this is something new which we do see, that the IT companies are coming in with innovations in the artificial intelligence, and constantly after the TCS and HCL Technologies, Tech Mahindra too coming up with such innovation. All in all, the profit figure was below our expectation. However, the revenue as well as the EBIT figure were above our expectation, and EBIT margin exactly as what we were anticipating.
All right. Thank you very much, Mansi, for that comprehensive analysis of what the company's earnings essentially look like. But on that note, let's also listen into what the CEO of Tech Mahindra had to say about the new launches and future roadmap for the company.
We are honored to have been recognized by the Government of India as a key player in the prestigious India AI mission. This aligns with the country's objectives to bolster leadership in AI, to foster technological self-reliance, and to ensure the ethical and responsible use of AI. I am proud to announce that we launched Tech M Orion, our next-gen agentic AI platform built on NVIDIA that enables intelligent autonomous execution of complex business workflows. Tech M Orion enables global enterprises to deploy AI solutions faster, whether in assisted or a fully autonomous environments, while maintaining control and transparency throughout the AI lifecycle. On the GCC front, we extend our strengths in global capability center services. I believe Tech Mahindra is uniquely positioned to offer an integrated value proposition to global enterprises. Our deep technology expertise and digital transformation capabilities are complemented by broader strengths within the Mahindra ecosystem.
And RBL Bank has clarified in reports suggesting that Emirates NBD acquisition talks. In fact, the bank has called these reports incorrect. For more details, let's go across to my colleague Anurag Joshi. Anurag, what essentially has the bank said? Is there a statement that the bank has essentially come out dismissing those reports that essentially have been suggesting about Emirates NBD acquisition talks?
RBL Bank has responded to media reports about the information that Emirates NBD, which is a UAE lender, they are in advanced talks with the private sector lender RBL Bank to buy an equity stake, to buy a controlling equity stake in the bank. Now, RBL Bank, in a filing to the exchanges, has said that it routinely explores opportunities, and such discussions do not merit disclosure, and this is under the regulation 30 of the listing regulations. And at the same time, it is denying the news which has been trickling out. And ET now had earlier reported and all that RBL Bank is in advanced talks with Emirates NBD for Emirates NBD to buy a controlling equity stake in the private sector lender. Now the deal would go to the RBI once the announcement is out. That is what the sources are telling us. In May, Emirates NBD was given the permission by RBI to operate as a wholly owned subsidiary in India. And buying a controlling equity stake in RBL Bank now means that they are tapping into a retail bank with a large consumer presence across the country.
All right. Thank you very much, Anurag, for all of those details and putting those details into perspective for our viewers. Ladies and gentlemen, time now for us to slip into a very short commercial break. Lots more coming up on the other side. You don't go anywhere. Welcome back, ladies and gentlemen. You're watching Business at 9, and let's take a look at some news that's coming in on account of Delhi's air quality. Well, the Commission for Air Quality Management today announced the implementation of GRAP 1 guidelines in the Delhi NCR region amidst deteriorating air quality and rising air quality index ahead of the Diwali festival. In fact, these restrictions under stage 1 of the Graded Response Action Plan, or GRAP, are implemented when the AQI goes beyond the set limit of 200. In fact, Delhi's AQI was recorded at 211 today, which essentially falls under the poor category. My colleague Samir Dixit is now joining in with more details. So Delhi's air has already fallen under the poor category, but we're given to understand that the Commission for Air Quality Management today has announced the implementation of GRAP 1 guidelines. What essentially falls under these guidelines, and will that be enough?
As the air quality begins to dip in Delhi NCR region just ahead of the Diwali festival, the CAQM has decided to impose the stage 1 of the GRAP with immediate effect. CAQM, the Commission for Air Quality Management, has decided to impose the stage 1 of the Graded Action Response Plan because the AQI, the air quality index, slipped into poor category. So this is basically GRAP is a tiered level action plan which comes into effect based on the air quality index. Now stage 1 comes into effect when it is there in the poor category. Usually when the AQI is in range of 200 to 300 level, then stage 1 comes into effect. And with this immediate imposition, there are a couple of activities on which there will be strict monitoring, or it will be put to a blanket ban will be there. For example, when it comes to the construction activity, so this means that any construction site having 500 square meters and above of area, the dust management plan will come into effect immediately. Also, the diesel generators can be used only for the emergency purpose. In addition to this, open burning of any garbage is strictly prohibited. Also, industrial emissions will be strictly monitored by the concerned agencies. For example, the factories or the power plants which are in a radius of 300 kilometers, they will be monitored closely. Vehicular restrictions will be imposed in the sense that the vehicles which are polluting too much, then the traffic inspectors or the concerned agencies, they can impound or issue the traffic challans as well. In addition to this, in the food sector also, the burning of coal and other such substances which pollute the atmosphere, it is strictly prohibited. Only clean gas like the LPG can be used for burning and for cooking purpose. Other measures, for example, the sale of the firecrackers, it is discontinued. There is a complete ban on the sale of firecrackers till the further notice. So with this sort of action plan, the CAQM has also warned the agencies and have given a clear instructions that they continue to keep a close watch on the AQI index in Delhi NCR, and it should not slip further. And if it happens so, then there might be an imposition of stage 2 and further, and it all depends on the AQI index.
Well, will those measures be enough? That remains to be seen. But for the moment, let's shift our focus to some news that's coming in from the world of technology. Well, Google is all set to invest a whopping $15 billion towards the setting up of a mammoth data center and an AI hub in Andhra Pradesh. The deal has been inked between the company and the Andhra government in New Delhi today. It also marks Alphabet Inc.'s largest investment in India and its largest data center anywhere in the world. Google's data center campus is located in the port city of Visakhapatnam, and that is expected to be in the range of 1 gigawatt and comes with an expanded fiber optic network. Let's listen into some of the key voices that we got from the event today and what they had to say on the scale of investments that Google is essentially making into the Indian AI and data center sector.
So it's very important for all of us, especially the industry, to reskill and upskill our IT professionals in a major way. Not at a very small scale, but at a very, very, very major, rapid scale, at a totally different scale and at a totally different pace. I would request Google to help the IT industry in that. I was having the word with Mr. Korean before coming to this meeting here. AI skilling, reskilling for the IT professionals. Please make it a major part of your entire agenda here. The second thing is about the undersea subsea cable. My request is that Andaman is a very strategic location. Singapore is today all choked. Why can't we make Andaman as the next big hub for global internet data transfer? From the Government of India's perspective, will provide full support for this.
Penetration and use of AI is very high in India. They are using AI, now we have to drive to take next level. With all our things, one is connectivity, digital connectivity. Second is data center and AI, real-time data collection. We are having ambitious plan of 15% growth rate. I am confident there will be a lot of changes, breakthrough changes in all walks of life, either health or agriculture or education or the way we are thinking, everything will change.
Data is the new oil and data centers are the new refineries. At this juncture, I believe it's not about Andhra Pradesh playing an important role in India, but India playing an important role on the global landscape. And this is what excites us. And this is why, the entire leadership is aligned in terms of executing this project at this scale. And as the HRD minister, now I think all the senior ministers have given me clear guidance that we have to skill up and we have to embrace AI. We have to look at revamping our curriculum, getting our youngsters ready for the next wave of opportunities.
Well, that's a big investment that has been made by Google as far as the India market is concerned, given the kind of tensions that US and India are currently going through on the tariff front, on the trade front. So this is consequential given the fact that Google is trusting the India's growth story and it is very much investing in the India growth story as well. Ladies and gentlemen, with that, it's a wrap on this edition of Business at 9. Goodbye and thank you very much for tuning in.